you have to understand that the Federal Reserve and all the banks that are part of the Federal Reserve System and even other banks, they hold a lot of bonds. So when that happens, their balance sheets suffer, and the Federal Reserve is the issuer of the currency. So if their balance sheet is suffering, the currency is going to suffer, and that's why this happened. Tuesday, April 2nd, 2024, Maneco 64, home of alternative economics and contrarian views. So bond yields or treasury yields rose quite sharply yesterday, and despite that, gold and silver remained pretty firm. And there are a lot of those out there who are precious metals investors or stackers who might be concerned whether rising yields are going to be negative for gold and silver. At least that's what the mainstream press, mainstream economists, central bankers always tell us that should happen. But we're going to look back at history, and I'm going to try to show you why I think we are in a 1970s environment where gold and silver rise along with bond yields or treasury yields. And we're also going to look at silver. This morning, silver seems to be doing quite well. And we're going to look at levels that are important for silver. And before we do, just wanted to tell you that if you enjoy my videos but haven't subscribed yet, make sure you do subscribe. Make sure you hit the little notification bell as well to be notified of all my new videos. And if you enjoy a particular video, make sure you hit the like button. So I'm going to go right back to 1941. That's when the bear market in Treasury started, a 40-year bear market. The 10-year yield was below 2%, and it went up all the way to just above 15% in 1981. And what that means is that here's the price of bonds. When the price goes down, yields go up. Very simple, and I have to thank Lynette Zhang for that little visual analogy. And it's vice versa. When the price of bonds go up, yields go down. It's very simple. And as you can see here, and I'm going to move forward from 1941 now to around the early 60s, and the 10-year yield was around 4%. And it rose all the way to above 15% in 1981. And despite that, gold had its biggest bull market ever up until then. Of course, it was fixed, the price, until August 15th, 1971 at $35. But then after Nixon closed the gold window, gold went from 35 to almost 900 in about 9 years. Yes, there were ups and downs along the way, and there were ups and downs as well, as you can see, for the 10-year yield. But notice how the big move in yields from the end of 1976, when the 10-year was just below 7%, pretty much equated to the bottom in the gold price, and the rise from around 200 to that almost 900 level. So gold and bond yields or treasury yields, and silver for that matter as well, went up together. And why was that? Well, because we were in a bear market in bonds, and you have to understand that the Federal Reserve and all the banks that are part of the Federal Reserve System and even other banks, they hold a lot of bonds. So when that happens, their balance sheets suffer, And the Federal Reserve is the issuer of the currency. So if their balance sheet is suffering, the currency is going to suffer. And that's why this happened. And I guess one could argue that it was Paul Volcker who ended this bond bear market, where yields got into double digits. But I would argue that it was more the markets that ended. It was the cycle. The cycle turned. And no matter what Paul Volcker did, I think bond yields were going to start going down. As you can see here, we had like basically 40 years of lower highs and lower lows in bond yields, and that helped create a massive everything bubble, because borrowers could refinance, always refinance at lower levels. They could borrow more, and lenders, their assets kept going up in value because, as I said, if yields and interest rates go down, the prices go up. So it was a great period for financialization for the very wealthy who have a lot of the financial assets, for the bankers, for corporations who could borrow very cheaply, buy back their stocks. So it was like a big party. And Paul Volcker, he let the market actually decide where rates were going to go. And rates went to 20%, the short-term rate. And I think we're still in the early days of the bear market in bonds. And it bottomed, of course, in March of 2020, with the 10-year going down to 0.3%. And as you can see now, we've broken that trend of lower highs and lower lows in the yields, and that's why I think we're in another bond bear market, and that's why we've seen gold actually bottomed in March 2020 at 1450, and now we're at 2200. And despite that, the 10-year yield has gone from 0.3 to around 4.3 right now. So that's what I'm saying. I'm not worried about bond yields rising because I think we're in a 1970s environment. What about yield curve control or more QE? Yes, they could do that and artificially bring interest rates and yields lower, but that would also put a rocket up the gold and silver price. So what this is telling me is that the major asset, if you want to call it, and I say that because treasuries are certificates of confiscation. There are IOU nothings. There's nothing behind it. You can't redeem a treasury for anything. Yes, they are what backs the Federal Reserve note or the American currency. I don't even like to call it a dollar, because a dollar is a weight of silver and a weight of gold. Yeah, it's going to keep losing value because bonds are in a bear market. So let's look at silver then, because this morning as I speak here, and it's 8:24 a.m. London time, silver is up 33 cents or up 1.3%. Some people see 25.25 as the key level now for silver. Some people see it 25.50 or 26. I would say the 26 level for me, if we break through there, then there will be confirmation that we're going to start running really fast. Silver is really going to start catching up with gold. It still has a lot to catch up, but it's going to be volatile. It's going to be like frustrating. Not as frustrating as it's been, but for example, we could see silver go up to $2 in London in the morning during London hours, and then the US comes in and it goes down $1, and then the next day it goes up 3 and comes down. I think it's going to be very volatile, and I think the miners are telling us that things are looking better. The silver miners did well yesterday. I do have some silver miners. I can tell you what they are. One is First Majestic, the other one is Mag Silver, and I've got a little bit of Nova Gold Resources as well. I'm not telling you to buy those. You need to do your homework, is what I have. So that's how I see silver. As you can see here by this chart, we're breaking out of, on a weekly basis, we're breaking out of this huge triangle we've had since 2020, which is basically part of the handle of a huge teacup that we've had formed since 1980 for silver. So before we look at the markets, just wanted to let you know that our affiliate in the US, Miles Franklin, they still have some specials. Their current specials are 1/10 of an ounce gold maple leaf for only $35 over melt. They've got 1 ounce silver Krugerrands, only $3.10 over spot. And you can get a hold of them on 1-800-822-8080, and you can mention Mario or Maneko64 sent you to them, or you can email info@milesfranklin.com. For my UK viewers, just wanted to remind you that Gold Investments, they still have some specials. They've got a 1% discount on 1/10 of an ounce gold Britannia coins. So all the details for Miles Franklin and Gold Investments are below in the description of this video. So let's look at the markets then. It's 8:28 a.m. London time. And in terms of news this week, we've got the jobs data on Friday in the US. We have a lot of Fed speakers as well. Just wanted to let you know that. So we got spot gold at 22.54. It's up about $2. High's been 60, low 45. And as I said, silver is doing quite well. We're at 25.43. It's up 1.3%. The high's been 48. The low has been 05. Dow futures, that's down 112 points. The NASDAQ is down 30. The S&P is down 5. And I don't follow these indices too closely, but I noticed yesterday before the market opened, we almost got up to 40,000, and then it turned around quite sharply and didn't really have a great day, the stock market. But anyway, the currencies as well are pretty much unchanged, so I won't go over them. The WTI contract, or WTI crude, that's up just over 1% at 84.30. Brent is up 1% as well at 88.20. And high-grade copper is up 0.5% at 408.50. Let's have a look at platinum. That's up $6, trading at around 910. And cocoa closed just below 10,000. It was up almost another 4%. So cocoa is still looking very bullish. And as I said, the 10-year yield jumped yesterday on strong PMI data. It got up to that key level there, 433, 434, and that's where we are roughly right now. And I think Ms. Yellen and Mr. Powell are looking very closely at that level. And they've got the PPT traders, the plunge protection team traders, ready to act if necessary, if you know what I mean. So with that, I'm going to wish you all a very good day. Take care. Bye.